Hello everybody, this is Prince. It's 22nd of June 2017. Like always, we are watching the American crude oil non-expiring CFDs. The chart that we're going to be using for today's analysis is H4 and daily chart. The technical indicators we're going to use are the 50 exponential moving average colored in red, Japanese candlestick charts, and an awesome oscillator. So before I proceed further, if you go to the description box of this video down below, you'll find some really useful links. We are offering managed account service. We are offering a live trade room where you can come join us and copy our trades. In the live trade room, we are trading crude oil and S&P 500 futures contracts. Right? We are also into revenue share and cryptocurrencies investing. So for details, even the WhatsApp number is there. The Skype address is there, and also the email and the blog. So let us get started. Let us see how we can really profit from the American crude oil. Now we have a resistance, a very nice resistance, a decent resistance at 51.97. And if we really zoom out, let me disable the auto scroll for you. The next close resistance where we are expecting to buy the buyers to jump in and buy heavy oil is 42.21. So we know our recent resistance, and we know our next upcoming support. Let me just quickly go to the daily chart and see. Now another support. We've got it 39.30. and we've got 25.79. Now please note that this video is not to be considered as a financial advice. It's just an information. It's just my opinion on the market. So please do not invest money that you cannot afford to lose. And if you don't have a really strong training in the trading markets, try not to use the real capital. I want to keep the video short as possible. Now let us go to the H4 chart. We've got a couple of ways to trade. First thing is, you should know how a reversal pattern looks like. Okay, it should look like a W. And what if you have a W? What do you do next? When you have a W formation coming up, you trade the break of the peak. Your stop loss is always going to be below the support area. Okay, and above the swing high, recent swing high, would be your buy stop or buy entry. So if you can see here very closely, there's a huge possibility that we'll have a W pattern. Okay, so W is forming. Okay, all right, this could be your next level of entry, and your stop loss would be below the swing low. Okay, so you buy here and you go all the way riding towards 51.97. This is one way to trade. Look for the W pattern. This is pattern based strategy. Let me just open the notepad. Number one is W pattern strategy. Okay, the second one is the price structure. Price structure. We have three main kind of price structures: the bull channel, the bear channel, and the sideways channel. Let me load the template. Okay, so let us draw our channel. First of all, we've got some lower lows. Okay, the market is making lower lows and lower highs. Yep, so we've got a decent channel here. Now, how do we trade this? Simple. We need the price to go up. We want the candle to break above this channel line. Okay, and we put our buy stop order above the channel highs. Okay, and we enter a long trade, and the market will do a little bit of zigzags. Okay, it's not going to go straight and always, it always goes in symmetry, and that is your buy entry if you want to go long. Okay, that's one way. Okay, second way is close above 50 EMA. What do I mean by that? Here's your EMA. Okay, the price reverses, it maybe makes here some zigzags, makes a W or additional W's, and if it goes up and if it closes above this green moving average, which is our 50 moving average, okay, we can put a buy stop above this 50 moving average and take a long. You can also do like this. Here's a very nice trick. You go here, this is 44.69, let's go to 44.71. You right click, go to trading, buy stop, and you put your buy stop here and put your stop loss at 42.01 or 42. This is one way. Done. We'll check it later. Okay, this is the third way. The fourth way is also very nice and very easy. It is when awesome oscillator curls above zero line. What do I mean by this? This is our awesome oscillator. Okay, we want it to curl up just like this. So you see, previously in the past, when we came to this 44 level, no connection. When we came to this 44 level, the awesome oscillator curled towards the upside, and it was a nice buy. Here's when it curled up. See that? Let's see the corresponding candle here. This is the corresponding candle, and it's a good move. It's a good move. The stop loss would have been here, 139 pips, but look at the move, how big it went. So that's one way to use it. You use the awesome oscillator curling up. Fifth way is a combo. Use awesome oscillator plus the 50 moving average. We want the price to go up. We want the awesome oscillator to curl upside as well. Plus we want the price to go above the 50 moving average. Okay, that's our sign to enter a buy. But if the awesome oscillator is still not curled up and the price closes above the 50 moving average, that is not to be considered as a that will be an invalid buy entry. Okay, way number 6. It's too much, right? Here is where we do a mathematical trading. We don't really need indicators for that. It's all going to be mathematical. Now here's a decision. Here you can make a decision that if you want to double your money. How do you double your money? You make a decision. 42.61 is the current market price is your buy entry. Okay? Assume the market is going to $22 a barrel. Okay? Let us pop out 22. The market's going 22, 22.61. Let's say, okay, this is where it's going. And when the market reverses, let us assume it's going to go $20 up, which is around 62. Okay, now what you can do is, here you have options. You can decide if the market goes from 42 to 22, your loss should be 50% off your account. What do I mean? This is mathematical. Example. If you have $5,000, okay, your stop loss will be $2,500. And what about take profit? Take profit will be also $2,500. There are a couple of good ways to trade it. This way you can double your money. Even you can do it the opposite. You can make 5,000 and 5,000. I would suggest to keep it. Let's be conservative here. We don't want to gamble. We want to be business people. $2,500. So let's say from 42.61 the market goes 62.6261. We make 2,500 bucks, which is really 50% gain in the account. It's really nice. 50%. Come on. No investment company, no real estate company will give you that kind of returns. And you can almost guarantee it. There are no guarantees in this business. Anything can happen. Like I said, this is just an analysis, not an opinion, or it's not an advice at all. It's my opinion and what I feel about the market. You trade at your own risk. So you get the idea. What else you can do? Here's one cool part. What you can do is let the market go $10 up from 42 to 52. Okay. You can close 50% of your position. What do I mean by 50% of the position? If you're trading 0.1 lot, mini lot, okay, you can close 0.05 at 52, and remaining you can let it float. All right, you get my point? So that is the other way. Let us look for the 7th example. You can use divergence. You can use divergence. Now we do have a divergence. I'm not going to explain what's divergence. You can YouTube it. There is going to be a whole new video that will come up. So this is a 4-hour chart. The market's making lower lows, but the indicator is making higher low. They're not matching. They're not in alignment. They're not in harmony. This means the buy signal will be triggered anyway. Okay, so you have a divergence here. Okay, one of the ways to trade divergence is, you've seen the divergence sign when the awesome oscillator curls above the 0 line. Okay, you can take your buy trade, or when the divergence come and you see a price close above the 50 moving average, you can enter a buy. All right, so I hope the video helps. If you have any questions, you can WhatsApp me, Skype me, and even send me an email. Email will be slow, and this video will also be posted in my blog. Now here's something really cool. Now there's a small offer. It's not a small offer. It's a really good offer. If you open a crude oil trading account with me, okay, and the trading account size is 1,000 US dollars, okay, I'm going to give you free coaching. Okay, you're gonna get free coaching, and number 2, I will give you 2 best long-term trading strategies on oil. That's my offer. There's a referral link. I am trading with Ava Trade because they're offering non-expiring crude oil CFDs, swap-free accounts. You deposit $1,000 with my IB account. You're gonna get free mentorship. I'm gonna make customized YouTube videos for you. We're gonna do Skype sessions, WhatsApp calls, till you master 2 long-term trading strategies. Let's remove the word long-term. Let's get off. Okay, so that's what you're gonna get. You're gonna have access to me, and you're gonna learn, and I'll support you. So yep, that's an offer, and this is not valid for the US citizens because of their regulations. US regulations do not allow people to open accounts with offshore brokerages, so it's not applicable, not for US citizens. If you have dual citizenship, then it's fine. Okay, so feel free to contact me. The details are there, WhatsApp and everything. So have a great trading week. Have a great trading week, and I wish you a lot of good success, good health and wealth, and we'll be in touch. Bye bye for now.